try to have them dedicated to a specific purpose.
Yeah.
You talk about in your module 2 stocks and bonds. So what would they be expecting from module 2, and what do you cover in there?
Yeah, I think I like to just break things down to the very basic core unit, and I think when people hear stocks and bonds, it's like very abstract and what is it, and so I basically just go through and say, like, what is a stock? What is a bond? I think most people don't even know what a bond is. It's just like this very abstract concept, and a bond is when you basically loan money to a government or a company, and then they pay you interest as long as they have your money. And at the end of the term of this bond, every bond has like a term of time, they give you all your original money back. And so it's a way, and you get more than you get in a savings account, right? So it's a way to basically be getting interest and building wealth in a different way from a savings account and a different way from a stock. And a stock is basically a share of, going to give away the whole course in this, which is totally fine because there's no secrets in the course, but like it's just like a more detailed breakdown. There's no secrets anywhere. It's like I give you the reading list, it's on my Instagram, it's all the same stuff. I'm just trying to get the word out. But yeah, stock is just a partial ownership in a company. We like break down that with examples, and we give like live demos of like how to actually buy a stock, stuff like that.
Well, don't worry, because when people don't pay, they don't pay attention. So this podcast is free, but hopefully they've got a notepad. They'll take action items from here. I want to deviate a little bit. Actually, I think it was my fiance that asked me about it because I hadn't heard about it in so long. Do you have anything that you can speak to about CDs? I mean, are people still investing in CDs? I know they aren't getting the return that they used to. Have they gone the way of the dodo?
They still exist. I think if you walk into your local credit union, I think they're a little bit dangerous right now because if you walk into your credit union and you say, I want to open a Roth IRA, they might put you in CDs. And a CD is a certificate of deposit. It's similar to a bond where you put your money, except with a bond, you're kind of like loaning it with a CD, you're like giving it to a bank like for a certain period of time in exchange for a certain rate. But yeah, those rates are essentially zero. And I would call them like negative rates because they're losing to inflation. And so, yeah, I'd say they're dangerous because I think people who don't understand how low those rates are and what the other options are could be hurting themselves by putting money there as opposed to a better investment.
And I'm going to skip around a little bit because, one, we're time sensitive here at #FinCon21. And I want to say, which source do you go to for the compound interest calculator? So I usually send people to investor.gov. Is that a source you use, or do you have something else that, either a free tool that folks can use to just kind of safely test these theories or concepts?
Yeah, that one's okay. I think there's if you Google compound growth calculator or whatever, I think there's a lot of them. The investor.gov one I think actually has a bug in it where like the numbers are slightly wrong. It's like close enough and it's all projection anyway, so it doesn't matter. But I actually have one on my website that is like a little bit cooler because you can put how much money you plan to spend in retirement, and then you put in how much money you have now and how much you're going to contribute per month and your age and a few other details. And then it shows you like when you can actually retire, like when you hit your financial independence number. Then it's fun because you can play with those numbers. And I think it's pretty simple, but people can kind of like their eyes are open, like, oh wow, if I put in a couple $100 more a month, like I'll retire 4 years earlier, and like when you get excited